So we're U.S. based cash bond QSIP investors. So we focus on U.S. markets only. But within that, there is a very, very large universe of opportunities, and we benefit from having invested in private markets, non-benchmark sectors, if you will, asset-backed securities, CLOs, CMBS. We've done that for now over 13 years, and it was a much smaller crowd back then, and it's become much more competitive and much more intense. But we've always thought of both markets as complementary. We believe there's diversification benefits to owning benchmark sectors like treasuries, agency mortgages, corporate bonds. But we also think there can be significant value in the other parts of the market. And so, we move capital around based on, once you kind of level set credit risk, you think about different market structures, liquidity premiums, we try to allocate across all of those markets. And again, I think since COVID in particular, having exposure to floating rate securities, as an example, having exposure to asset-backed securities, CLOs, CMBS, there's been significant periods of time where relative value has been pronounced in those areas. And we've done we think a reasonably good job of investing across those different markets. And we think having the largest menu of options is very important. Having said that, all of the rage for direct lending and CLOs and asset-backed securities with these very large asset managers continuing to buy up insurance companies and use those as platforms for investment, we think now necessarily isn't the best opportunity to just go, invest in those areas hand over fist, but there still is some relative value opportunities in those markets.